In 2008, the UK housing market faced a catastrophic collapse, leaving lasting scars on the economy and homeowners alike. Fast forward to 2025, and many are asking, are we on the brink of another housing crisis? The 2008 financial crisis was triggered by a combination of factors: excessive subprime lending, lax regulatory oversight, and a global credit crunch. UK house prices fell by approximately 20% from their peak, leading to widespread negative equity and a surge in repossessions. Today, the situation is markedly different. While house prices have risen, the underlying factors differ from those in 2008. House prices. According to Nationwide, the average UK house price at the end of 2024 was £269,426, a 4.7% increase from the previous year. Mortgage rates. The Bank of England's base rate stands at 4.75%, with average mortgage rates between 4% and 5%. Inflation rose to 3.5% in April 2025, driven by higher energy and transportation costs. Affordability remains a significant concern. Deposits. A 10% deposit on a typical first-time buyer home now equates to around 55% of gross annual income. Parental support. Over half of first-time buyers in 2024 received financial help from family, totaling £38.5 billion since 2021. Government interventions have aimed to stabilise the market. Stamp duty changes. In April 2025, the stamp duty exemption threshold for first-time buyers was reduced from £425,000 to £300,000. Housing investment. The October 2024 budget allocated £5 billion for housing investment in 2025 to 2026, focusing on affordable housing. While both periods share high house prices, the causes differ. 2008 was characterized by risky lending practices and a global financial meltdown. In 2025, the situation is driven by supply shortages, increased demand, and economic factors like inflation and interest rates. Experts suggest several possible scenarios. 1. A market correction, which would be a gradual adjustment as affordability pressures mount. 2. Stagnation, with prices plateauing due to economic uncertainties. And 3. Continued growth. If inflation and interest rates stabilize, the market could see modest growth. While the UK housing market faces challenges, it's not a mirror image of 2008. Prudent lending practices and targeted government policies have created a more resilient environment. However, affordability remains a hurdle, and the market's trajectory will depend on economic conditions and policy responses in the coming years. Stay informed and make educated decisions in the ever-evolving housing landscape.